Stop using all those indicators. You don't need them. I'm going to show you the only two indicators that I use to make successful trades and how I'm done taking losses. So come watch. Yes, I know, I got to go through this. This is all the legal stuff. I am not a financial advisor. This video is meant to be educational and entertaining, so I hope you are. Know that investing involves risk, trading involves risk, and you can lose a lot of money. Well, this is the third video in the series of me not taking any more losses, and this has been the hardest one for me to put together. The reason is I only use two indicators, and you could spend hours and hours and hours and hours just on one indicator. But I don't want to do that. I wanted to make this a quick and informative video. So what I decided to do is I have my most recent trade. I took a bunch of screenshots. I'm going to talk to you how I use these indicators to make the trade. I thought that would be better just showing you the practical application of these two indicators. So what are the two indicators? One is the Exponential Moving Average. And what that is the moving average actually weights the more recent moves in a security versus taking everything evenly. I like this because of the fact it's more timely. Every indicator out there is a lagging indicator. It doesn't make a difference. It's stuff that happened in the past. However, the exponential or EMA, you'll hear it all the time, it gets it closer to what you're doing. So I like that because of the fact I have a better feel for what the stock or whatever security I'm in is trading. Then we have the relative strength index, which is actually a momentum indicator. And that gives us a good idea of the momentum of a stock. So is it still in a buying or is it in a selling? What is everybody doing? And that can be very important to see exactly what direction and how the market is moving. And that, to me, is very important in my trades. By the way, I took these right off of Investopedia. Investopedia is absolutely fantastic. So as you're researching or getting to learn about trading, Investopedia is absolutely awesome. You can put anything in there and there's a ton of stuff. And no, I am not a sponsor. They're not sponsoring this. I just think it's a cool site. The trade we're going to talk about today is Rumble, R-U-M. And this is one I trade pretty often. It is a growth stock. It is a new stock, and so it really has some volatile moves when it goes. Almost always 1%. And as you remember from a previous video, this side I think, or maybe this side, I don't recall, I'd like to get that 1% move. And this is a stock that I can get that move pretty quickly. Now, before I actually get into my Rumble trade, I do want to go over the basics of the EMA and the RSI, the Exponential Moving Average, and the relative strength index, and why I watch them and what I look for. So first off, with the EMA, I always like to watch and see exactly where the stock is heading. Always like it to be above the yellow, that line. I want my candles to be above that yellow line, which is the EMA. Again, 9 periods back. That lets me know that we're on the right side and we're potentially moving up. And you can see in this one, this is Apple that we're looking at. It's on the daily. I trade on the 5 and the 15, but here on the 1 day gives you a general idea of what we're looking at. So this is, we're heading in an upward momentum. Now, I also like to look at the RSI. Now, I've made this a little bit bigger so you can see a little bit better what it's all about. On the RSI, there's 3 key lines that we look at. We look at the 70, the 50, and the 30. The 30 lets us know that, okay, it's gotten to a point where people are going to start buying again. On the 70, it's a point where, okay, people are going to start selling because it's been overbought. These are not guarantees. These are not a point that you get to where it's like, okay, it's time to sell, or okay, it's time to buy. It's an indicator. It's a lagging indicator, so you have a general idea of what is happening. As you can see in this one, there's a big green section there, which means that it kept going up after it went to 70, and it will do that. Same thing will happen on the opposite direction. As you can see here, it went below 30 and it kept going down. So it doesn't necessarily mean that people are going to start buying or people are going to start selling. You need to continue to watch to see exactly what the momentum is doing. And I always like to wait till it gets down to that point before I really start buying. I don't want to buy it when it's all the way at the top because potentially it's going to go down. So I wait till a point when it starts to make that move and start go up, when the blue, which is the current RSI, goes over the yellow, which is the average. And here's a good example of what I'm looking for on that cross. You can see there's a really strong cross. We're right below the 50, so it's about the time when it's really going to start taking off. And as you can see in this example, it does really kind of take off. And here I made it so you can see the EMA a little bit better. You see we had the one green candle, which was really strong, that went above. We had a confirmation candle right above that, above the EMA, and it petered along beside it, but then boom, it just took off and kept going. Now let's get into Rumble. So Rumble is a stock that I like because it is a growth stock. It is a new company, so there's a lot of movement in Rumble up and down. At one point, Rumble was at $10 and $11. As of this trade here, which I think was last week, it's at $5.80. So again, that's a lot of movement. It's not something that you want to buy and hold currently. It may be something that you do want to buy and hold. That's completely up to you. But it is a stock that is continuing to go up and down, and you get some pretty good moves on it. This setup right here is my favorite setup. As you can see, we're looking at pre-market. Pre-market, it's at $5.80. The previous close was $5.58. So we've got 22 cents that is already moved pre-market. So that's a good setup. You can also see down at the bottom, and we're looking at the 1 day also. You can see down at the bottom, we're all the way down at 30. So we're down at a point where, okay, people are going to start buying again as the price is above the previous close. Now let's move back down to the 15. Now we can see what's going on pre-market. And yes, we have that upward movement going on in pre-market. Because we changed the 15 though, you can see our RSI is all the way to the top, close to 70. What that is telling us is that all the companies that trade, all the big brokers, they're getting ready to take profit. So we are going to wait until they're done taking profit, and then we're going to get in so we can make some profit. So again, this is pre-market. Now we look for when the market opens, and as you can see, there was a big spike and then it dropped. That is everybody taking profit, and that is what we're waiting for. We don't want to trade, jump into the market when it's taking off. We want to wait until after all the profit taken has happened. And as you can see, it dropped below the EMA. And you can see down below that the actual RSI has dropped below the average in the RSI. So that is telling me that we're getting ready for the setup. So now this is where patience kicks in. We have to wait for the right time to get into this. It takes a lot of patience. I have watched stocks all day long, but it's always been worth it. Well, not always. Most of the time it's been worth it. So let's watch this one and see what happens. Again, it's gone down. And we've changed from the 15 to now the 5. I like the 5 just because it's a little bit faster moving. I like watching paint dry, but I don't like watching it at 15-minute pace. I'd rather watch it at 5-minute pace. So as you can see, it's made a little bit of U-turn. So both in the RSI and in the regular movement up top, it's making that move. Now it's still below the EMA. We haven't got a cross on the bottom either where the blue has crossed, where the average has gone below the current. So we're going to wait. And it's a good thing we did because it bounced. It bounced off and went back down. And as you can see, the current RSI never hit the average. So that was good that we're waiting. We don't want to jump in too soon. And it went and it tried again. But look, we've got the RSI that looks like it wants to cross. So we have one candle that's starting to go above the EMA. So that is a good potential. Unfortunately, it turned around, went back the opposite direction, and then went sideways for a couple hours. Again, patience. Wait for the right time to get in. You've got time. You've got patience. It's not going to go anywhere. Okay? Don't rush in. And I'm waiting. So we waited till about, what is that, about 11:45. And we have one candle that popped right above EMA. We've got the RSI that looks like it's starting to go above. So potentially, that might be a point that we can actually get into this. So we had a good pop candle at about 12 o'clock. I think it's 12 o'clock or 12:05. So that's a good confirmation candle. So that would have been a good time to get in because that shows you we've got some volume that's going in. I, however, did not get in. I might have been on the phone or something else going on, but at that point I did not get into the trade. And that's okay. It went up a little bit and then dropped back down again and then followed the EMA for a little bit. But you know what? We are still above the EMA, so we're actually doing good. So it's a potential we might be able to get in. I did not, and look what it did. It dropped below the EMA and then it dropped below the RSI as well. But that's okay. Look what happened at about probably 5 minutes to 2. 5 minutes to 2, we got a strong candle. It's a bit of a doji there, a fat doji, where it spiked up, spiked down, but they kind of leveled out in the middle. But we also got a strong cross over the RSI. So this is another good potential, but we're going to wait to see what the next candle does. Holy smokes, look at that. So the next candle actually spiked up and I waited. I waited for it and it dropped down a little bit and then it went back up again and then dropped down. I actually got in at 564 on that big candle there that spiked up, that has that tall tail on it. I got in at 564, dropped back down a little bit, but it didn't break. But because of that strong cross over the RSI, I knew I was good. However, I did not know I was going to be this good. And it completely took off. That next candle did. So my 1% goal was 570. It actually went all the way up to, gosh, I think it went all the way up to almost maybe 585, 586. I actually got out at 584. You cannot predict the top. Don't try to predict the top. Take your profit. It spiked up. I was like, okay, I need to get out. It may go up higher, but I need to get out. I need to get my profit. And I did. I got out well above my 1%, so I was happy. But look what happened next. If I had not gotten out, it dropped right back down. Now, granted, it went up a little bit again, but it dropped right back down to below my 1%. Do not try to predict the top. You cannot predict the top. As you can see, looking down at the bottom, our RSI crossed over the 70. So that puts us in the point that potentially people are done buying. So you need to get out. It is going to drop back down. Take your profit and run. It was above the 70, so it's already telling us that way too much buying has been going on. It's time to take a little bit of a reset. There are some other terms that we'll get into probably in some later trades that I've learned over the years. But that's really the basic. I'm just using the EMA or the Exponential Moving Average, and I'm using it in conjunction with the RSI or Relative Strength Index. Using both of them paired together to really decide when I'm getting in and out of trades. It's no more complicated than that. Getting a feel for the market, seeing exactly how it's going, getting it at the right time, being patient and using discipline to get in and get out of trades. I hope you enjoyed this video. I know it was probably a little bit of confusing videos, a lot of stuff going on in it. I didn't want it to go on for 3 hours, which would have been really easy to do. All of my videos from this point forward are going to be trade videos. So I trade about 2 to 3 times a week. So every week I will do my best to get at least one video every week where we can dissect a trade. I'll try to pick my best one or maybe my worst one for the week so you can see exactly what I'm doing to get in and out of trades and take no more losses. Again, no more losses from this point forward. Again, thank you. Hope you like and subscribe and hope you follow me along this journey. Thank you.